Good morning. You're watching a short, daily market outlook for Wednesday, 13th of June 2012, prepared by Windsor Brokers. As the elections in Greece, the day of elections is approaching, the fierce race among the European Union as a bloc, it's in a deep debt crisis, with the risk of spreading the crisis to the other countries, especially after the bailout was approved for Spain. Italy is now coming in focus. Austrian minister commented yesterday saying that Italy too may need a bailout, and of course this is mostly expected scenario, as debt of Italy is approximately 1,900 billion euros, and of course Italy as one of three biggest economies in the Eurozone is in troubles at this point, and the most likely scenario will be following Greece and Spain with the bailout. The comments for Italy came just after yesterday's the Moody's downgrade of 18 Spanish banks that basically limited, put actually pressure on the single currency, as well as Spanish 10-year bond yields reached euro era high at, if I'm not mistaken, 6.8%. That is another negative signal for the single currency, as it is currently in the sideways mode, consolidating the heavy losses from last Monday's peak, but still outlook remains more negative for the single currency. That we will see in our technical part in a couple of minutes. Other focus is on tomorrow's OPEC meeting, as OPEC and the US government agreed yesterday that global oil markets could loosen further in the second half of the year, with prospects for demand dimming, while non-OPEC supply races ahead more quickly than expected. In its monthly report on the market fundamentals, the U.S. Energy Information Administration cut its forecast for oil demand growth this year by 150,000 barrels per day to 810,000 barrels per day, as the European crisis continues to weigh on the world economy. Rapid growth in the U.S. and Canadian production forced the agency to revise up its estimates for non-OPEC output. The Organization of Petroleum Exporting Countries releasing its report just 2 days before its ministers meet to set production policy, made a few adjustments to its forecast, but said risks appeared skewed towards the looser conditions. As mentioned in previous sessions, the OPEC president and the Iraqi oil minister said that good and suitable price for a barrel of oil should be around $100 to $120. It sounds more hawkish compared to the previous comments of Saudi Minister Naimi, who was mentioning levels approximately $80 to $100 per barrel, compared to the other bloc in the OPEC that consists from Iran, that is currently under sanctions, and the Latin American countries that are would be very comfortable with $200 per barrel. Currently, there's still strong pressure on the oil price. Keeps the levels of the oil quite low, despite the recent recovery from yesterday's lows at 81.10, with the still a larger picture showing a quite a negative trend for the oil. From today's calendars, I do apologize, we have technical problems, so I will just read it for you. A number of events due today, with German final CPI inflation for already released at minus 0.2% according to expectations, and the previous month. Swiss PPI just a few minutes ago released at minus 0.2% versus minus 0.1% forecasted. The European industrial production is due at 9 o'clock GMT, and it's forecasted to further decrease by minus 0.9% compared to previous one at minus 0.3%. US retail sales are top indicator that will be released today, with the monthly retail sales expected to tick lower by minus 0.1% compared to 0.1% of the previous release, while core retail sales are expected to stay unchanged at 0.1%. Producer price index from US is forecasted, the monthly is forecasted also to go lower by minus 0.6% compared to minus 0.2% of the previous release, and the core PPI unchanged, expectations unchanged from the previous release at 0.2%. US business inventories are due at 1400 GMT, and 0.4% is today's forecast compared to 0.3% of the previous release. And finally, the crude oil inventories weekly release at 1430 GMT. The third consecutive draw in the stocks after 9 or 10 weeks of building up. The US stocks is now forecasted at minus 1.6 million barrels compared to draw of previous week at 0.1 million barrels. And now we're going to take a look at the technical part that most of you is awaiting, and see the movements and forecasts for the next for the near term for the majors and the commodities. As shown on the hourly chart, initial optimism and positive tone on euro after a Spanish bailout was announced during the weekend, when the pair peaked at 126.67, faded, and the pair dropped as low as 124.40, touching the previous low of last Friday, with the current consolidative sideways movement seen during the past 24 hours. So far, the 55 days exponential moving average has capped the upside and keeping the pair within 124.40 and the 125.30 range, where is also 38.2% retracement of the latest down leg. However, this morning's fresh strength is now attempting at the upper part of the upper boundary of the short-term range, with the break here, and more significant, I would say 125.66 is the intraday low of 11th of June, as well as 125.80, 61.8% required to give some more positive tone for the single currency. Break above 126 and possible today's close above this level would be bullish, and turn the focus again higher, and there will be signal for possible further extension of the short-term recovery from 122.87 low of 1st of June. Break above 126 and 126.67 is required to do so. However, more negative news and fundamentals at this point, especially talking about news, are not expected to be so supportive for a single currency, and based on the current situation, the downside, I would say, is still quite vulnerable as the pair approaches its strong and key near-term supports at 124.40. There are several attempts that were contained at this level, and 124.00 as failure to sustain gains, and the more negative news coming from Eurozone push the price again towards this key support zone. A loss of 124.40 and 124.00 is expected to sideline the short-term bulls of 122.87 and bring basically 123 as a round figure support, and 122.87 in the near-term focus. Just quick look at the daily chart. Studies started to point higher, and the good gain of momentum is seen on the latest rally, but as long as 126 as our break point holds the upside limited, and there we don't see the break above this level, the outlook would be still under big question mark for further gains, as studies are still in the negative territory, although pointing higher, no yet clear signal. We need to see break above 126 and 126.67 high of last Monday. That also marks 38.2% retracement of the down leg from 132.82 to 122.87 in order to signal some a stronger retracement of the previously mentioned down leg. The cable maintains its short-term positive tone of 152.67 low of 1st of June, with 156 being tested so far. This is also the previous low of 12th of March 2012, and acting as a strong resistance so far, holding the upside, but recent price action remains supported and containing all dips are contained by the ascending bull trend line drawn of 152.67 with the higher low seen at 154 and the latest at 154.52, with the yesterday's action higher and brief break above the near-term bear trend line of 156 and through 155.81, as well as a brief break above previous high at 155.81, hitting 155.89 so far, keeps the upside still in focus as hourly studies, despite currently in the descending move, still holding a positive tone, along with the 4-hour ones, keeping the upside in focus. On the downside, 55 and 20 days moving averages at 155.20 currently, and the 155 zone as round figure support, along with the 154.80 trend line support, need to hold the downside in order for possible further extension higher. However, need to mention that the current toppish tone that is still unable to break above 156 might be quite risky for the pair, as further weakness of euro might drag also the sterling lower. From technical point of view, if we see the failure, actually the failure to break above 156 would keep the risk towards the trend line support and the moving averages at 155.20, 155.00 and 154.80, loss of which would the sideline would put short-term bulls on hold and allow for a stronger reversal. Next supports, next significant support is seen at 154.50, and the more significant is 154, loss of which would be signal for further extension lower, and the test of 153.20, higher low of 5th of June, as well as a long-term trend line support drawn of 135.00, 2009 low. Similar to sterling, dollar yen holds the positive tone, but upside remains so far limited under our next strong barrier and round figure resistance at 80.00, as recent gains hit 79.78 so far, and the pair remains remains congested under this level, but the downside so far protected at 79.10, the range low, the near-term range low, as well as 55 days exponential moving average just ahead of 79.00 previous low that now acts as support again. And while holding above 79, immediate focus is still at the upside. We need to see a break above 79.78 and 80.0013 zone that marks the previous low and the 38.2% retracement in order to resume the short-term recovery of 77.65 and the open next levels at 77, pardon, it's 80.34 and 80.60 double top of beginning at mid-May. As mentioned yesterday, the descending 55 days moving average that crossed below 90 days one, and now is risking is risk for further gains to be limited. However, the hourly studies are still in the positive territory, but rather neutral mode at this point, while 4-hour ones are pointing lower and losing as momentum is breaking below the midline. Could see risk of a possible attempt at the lower boundary of the near-term range at 79.10 zone. A risk is seen on a loss of 79.00 and the 200 days moving average at 78.69 today. That will be signal of creating a lower top at 79.78 and a further extension lower as a part of a larger downtrend from 84.17 yearly peak. Break below 77.65 low of 1st of June is required to confirm. And the dollar Swiss is still holding a near-term positive tone of last Monday's low at 94.77 after a gap lower opening when the pair quickly recovered a big part of its losses of 96.56 as 96.49 was seen so far. Currently, this morning's price action is moving towards the downside and approaching the near-term range floor at 95.83. That also marks 38.2% retracement, and the risk is seen on the break below here and the more significant 95.50 zone that will put the upside attempts aside in favor of a further extension lower, as a larger picture shows the pair still in the descending movements of 97.69 1st of June high in the corrective action, as a brief I would say clear, not a brief break, pardon, below 61.8% retracement at 95.20 and a brief break below 95.00 handle so far reached 94.77. In case of failure to regain 96.56 and 96.75, our next barriers, further ranging would be the likely scenario. However, the 4-hour chart studies are now still holding the positive tone, but it seems losing traction, while hourly studies are also pointing lower now, and the immediate risk is seen on the loss of 95.83 and the more significant 95.60-50 zone that will sideline bulls. Ability to hold above these levels would keep hopes of fresh attempt higher in play, and clearance of 96.56.75 is expected to open 97.00, our last barrier en route towards 97.69 as a part of the larger uptrend from a 90.41 low of 1st of May that peaked so far at 97.69. Crude oil's near-term price action shows the corrective action is still in play after bounce of 81.10, marginally fresh low posted yesterday. So far reached 83.70, where the recent rally stalled, and currently it's in rather sideways movements, consolidating the gains from yesterday, with downside being protected so far at 82.60, just above the ascending trend line of 81.19 broken. There was a false break of the trend line from 81.19 previous low through 82.00 higher low, holding above immediate support at 82.50 that marks the trend line and keeps the possibilities of further extension higher in play, as the investors are cashing their short positions on the latest downleg from 86.61 Monday's peak, with the upside barrier at 83.84 seen as the next 50% retracement ahead of 84.50, 61.8%, and last week's close break, above which, along with the 85.20 zone, is expected to turn immediate focus higher and actually extend this near-term corrective action. Any failure under 86.60 would be signal for a fresh leg lower, as the pair's recent short-term range top at 87.00 stays intact, 86.60, 87.00, with descending 55 days exponential moving average maintaining the negative tone, and more closer one is 20 days exponential moving average that caps the current price action. As studies remain negative and the overall outlook for crude oil is firmly bearish for now, further extension lower would be the likely scenario, unless we see a regain of minimum 87.00 as our short-term range top, while a break above 90.91 would be more supportive for the short-term action. Otherwise, risk would be seen towards 80.00, our next downside target, and strong support. That was all for today, Wednesday, 13th of June 2012. Thank you for being with us and attending our live sessions. This session will be shortly recorded and uploaded in the YouTube's page called the Windsor Brokers Forex, where you can find a number of other items such as short-term technical analysis. We'll be back tomorrow morning at the same time at 7:00 GMT. Until then, I wish you a nice day and successful and profitable trading. Good luck.